Yeah, hi, good evening, everyone. Can you all hear me? Is it loud and clear? Do give some feedback to know whether if you all can hear me. Yeah. Can you all hear me? Great. Okay. All right. Sorry. Thanks for joining. Loud and clear. Okay. It's 8 o'clock. I will start as usual. Let's be punctual. Okay. Let me go to my screen. All right. Great. Okay. Once again, thanks for joining. As mentioned, this is the second half a year market outlook. We did a first session for 2021 way back in January. So that's why I think since it's July, it's appropriate for us to actually know about the second half of it. What is the outlook there? Yeah. Standard disclaimer. Wait, I'm not sure if you all can see my screen. Yeah, hang on a second. Some technical issues. Can you all see my screen, or is it black? Okay, wait. Sorry, let me try this. Oh, can see. Okay. I think the challenge is when I share my screen, I can't see my own screen, so I can't see whether can I see or not. Sorry. So apologies. Yeah. All right. Okay. My face is not nice. Okay. Okay. As mentioned, this is actually the recap of our outlook. In January, we actually wrote a poem to actually talk about what is our view for 2021. And this is a recap of a poem. So far, some of it has actually materialized. Some of it is actually still in progress. But if I really roughly run through what is the meaning behind each of the two lines is, the first two lines actually represents, if you look at it, whichever sector that has not been loved last year, 2020, of course, where the sales are being affected by the COVID and the lockdown, will there be a recovery this year? So, which means that those are the forgotten sectors last year. My earlier take is that this year, those are the sectors that I think will likely recover, or the performance will be better. Yeah. As David became champion on Goliath beaten, in the coming year, will the tale be different? This actually means, for those who are familiar with the story of David and Goliath, Goliath was actually a giant, and David is actually a peasant. And somehow a little boy is able to defeat a giant. What this actually means is Goliath actually to me represents the big cat, whereas David is actually the small cat, right? So again, last year you see a very strong performance in the small cap sector, whereas the big cap sector was actually lagged, which again later I'll show more graph charts to actually tell about it. So in 2021, could it be that investors should position the other way around, that they should look at more on the big cap rather than the small cap, right? So this is actually the meaning of the second line. The third is, will the premiums sustain their value or reality bring their worth for what is true? So this is what I'm cautioning against those hype up sector where they're actually traded at very, very high valuation, right? I think one of the sector that I've repeatedly mentioned in January, whether directly or indirectly, that I'm quite concerned about the valuation has always been the tech sector, right? And you look at in the early this year, the tech sector has been trading at quite a high premium, and therefore, it is due for correction. Is this the end? I think later, let us find out more later. I'll talk about them later. So this is actually the meaning of the third line. The fourth line, will the birds continue to sing when spring is over? Will they nest and rest until winter? So initially, my take is the first 3 months of the year will be good for the market. Whereas subsequently, you'll be quite challenging, right? Partially true. So you notice the market actually start to weaken after March. But I'm having a very different thought now that I think we may have reached the bottom. So instead of the market hovering on the downtrend for the rest of the year, I'm quite slightly optimistic. So I think this is a change. And so this is basically the poem I wrote early January this year, right? Okay, now let's take at Bursa index and small cap index. So FBM KLCI represents the Bursa big cap index, which again is the 30 largest stock in the market, also by liquidity. And whereas the small cap index is an index made up of small companies. Roughly, you're talking about maybe 300 over companies. If you look at SC's definition, small cap are companies where the market capitalization is 750 million and below. So those are what we call as a small cap. So you look at this has been the chart of big cap and small cap. Big cap, the longest data I can get is actually on 4th of February 1980. Whereas for small cap, it's only started in the year 1996. So that's why the orange line only started much later. So it's interesting if you look at, this is actually by index return, but if you look at in terms of log return, mean to say you count by percentage, what is the gain looking like? So again, these are the two same chart, but in the log chart means to say you count the return. So what it means is that if you look at since February 1980 until recently 6 July 2021, the total return of FBM KLCI is actually 576%. If you translate to an annual return basis, right, or we call it as CAGR, right, cumulative annual growth rate, right, it's actually 4.8%. So mean to say, had the investor invest in the KLCI, in the index, since 1980, the annualized return is around 4.8%. If you look at the yellow line, if you look at, the bottom, the FBM SC, since inception in 1996 until now, actually the return is 12%. And bear in mind, because this index was actually launched in 1996, where in the peak of the market, then after that, it actually underwent a correction in 1997-98. In the same period, a big cap index, like for like, which is represented by the yellow line, is actually 54%. Right? So give you a sense of the long-term return in both the KLCI and the small cap index. Yeah. Okay, now let's look at from 1st January last year until 6 July this year. Right. So again, if you look at it, technically, as I mentioned earlier in the poem, if you look at last year, technically, even the whole year KLCI has been pretty flattish, right? And whereas if you look at the small cap index, the one that's actually performing much better, right? Okay, now, this is an interesting chart. What I did was, I take the return of KLCI annually from 1st January until 31st December, right? Since 1980. So you're talking about a 41 years average. So what I did was, I take the annual from January to December, the index, and I try to plot an average trend. So what does the trend look like on an average basis for KLCI from January to December? So this is the trend that it actually looks like. So that means on average over the last 40 and a half years, because now it's July, you haven't finished yet, right? How does the movement of KLCI looks like from January all the way to December? And bear in mind, within this period, there are two major crises, which is, of course, in 1997, Asian financial crisis, and 2008, Great Financial Crisis. So what happened, or what if we take out these two exceptional years, where it's highly volatile and high rebound, what you get is actually this chart. So again, it's an average annual trend from 1980, excluding 1997 and 2008 Asian crisis. And what you can see is that generally excluding any crisis year, the Bursa is actually quite stable. And look at it, technically, it is actually quite little volatility. This actually explains why you look at it, a lot of foreign investors used to explain or used to say that Bursa is actually a very defensive market. Actually, this chart actually represents that. Okay, if the past is any indicator, I'm not saying that this one can actually forecast what is the future, right? It's just a comparison, and it's quite obvious the past is not an indicator of performance. It just gives a sense of what average it looks like. So the blue line here actually represents the current year to date. 2021 year to date means from January until July, 6 July. And you can see that actually there is no indication that the trend, there's a divergence of trend, right? Actually, we're actually heading downwards rather than following the average trend. But I must stress, I'm not saying, I'm not using this to predict what it's going to look like. This is more of just a trend, or letting you understand what it looks like on the average. Now, let's look at more interestingly on what is our return by sector since 1st January last year, right? Okay, this one is from 1st January to current 6 July, and notice there is a red line in between that actually represents the cutting between 2020 and 2021. Okay, the best performer, of course, is the healthcare sector, and of course, again, within this period is 122%, right? And of course, you know what's inside, they need the glove. But then bear in mind, if you really look at it, the healthcare index has been on a downtrend since July last year. For those who remember last year, July, I did caution a lot that for those who want to jump into the healthcare bandwagon, I did caution them that again, much care should be needed, as I think that is overhyped and things are not as rosy as it seems. Of course, with benefit of hindsight, it did correct it back then. The second best sector is actually the technology sector, which is a sector that I like quite a lot last year. And look at it, it actually performed 115%. Quite a nice uptrend there you're seeing. The third best performer is actually telco, which is 3%. And after that is all downtrend, negative. And you can see the worst hit was actually construction, 20% down, plantation 19% down, and REIT 17% down, so on and so forth. Right. So if I just zoom in on the year to date from 1st January until 8 July this year, for all the same sector analysis, you notice on the year to date, there's only 3 sectors that's up, which is the technology sector, which is up by 18%, followed by industrial sector, which is 6% up, and telco is 6% up, right? All the other sectors remain down. Again, healthcare is down 23% year to date. Plantation is down 14%, construction 12%, so on and so forth, right? Okay, now let's look at sectoral valuation. Just now we're looking at the trend, right? Now let's look at the valuation. What are they priced at? The first thing we'll look at it is on the KLCI index, which is represented by the orange line, and the PE valuation. Sorry, my chart becoming very small. I'm sorry, I've got a feedback. My chart is becoming very small. Hang on a second. Oh, okay. Sorry. Yeah. I think I know the problem. Sorry. Display setting. Yeah, I think it's bigger now. Sorry. I can't see. Thanks for commenting. I saw a comment. Yeah, I hope it's bigger now. Okay. This one actually looks at the KLCI index and the PE. As I mentioned, the orange line is actually the index, whereas the blue line is actually the PE, or the price to earnings. It actually indicates the valuation, whether is it overvalued, undervalued. Look, historically, KLCI valuation is around 16 to 17 level, whereas currently it's trading at 15 times perspective. And as you notice, that is pretty flattish since last year. KLCI didn't really move much. Yeah. The next sector is, of course, the tech sector. Everyone's, I won't say everyone, majority's favorite. And if you look at it in the index perspective, yes, surged substantially, especially since March last year, represented by the orange line, and also the valuations around this. Again, I must caution that this PE is as derived from Bloomberg, is actually what we call as a best BEST PE, or actually meaning to say based on forecasted forward PE. What they do is they actually take the forecast of analysts going forward. So it's actually a forward PE indication, right? So that's why it looks at 35. But whereas if you really look at the tech sector now, you look on the trading basis, right? A lot of companies is trading at above 70 times PE multiple, right? So this actually explains the divergence between these two numbers here. And at 35, if you really look at it, it's still quite on the high side. Let's look at it technically before this, right? Tech on average, the sector has made around 20 over times PE average. We look at the trend, the blue line, but now actually trading at 35. My take is, I think I will still put more caution personally. Yeah. Is it a good level? I will still prefer to pick and choose and sit and wait approach, right? My caution has always been this. I think I mentioned this many times. The biggest challenge for 2021 is actually expectation, right? Mean to say, investors' expectation plays a much bigger role on the direction of the share price and the market rather than the performance. Okay. See, you may start to think that why some people are willing to pay 70 times or even 100 times PE for a tech stock. Their argument could be this, right? I'm paying 100 times PE now for this stock, and I expect the profit to grow 100%. So my profit grow 100%, my PE will drop to 50 times, right? So that it becomes cheap. But the risk is, I said, this is your expectation is doubling of profit. What if at the end of the day, the profit is only increasing by 80%? And by all means, an 80% growth in profit is actually very, very good. But because you are expecting a 100% return, so when the company actually delivers an 80% return, rather than being happy about it, you're going to be disappointed about it. And this disappointment will actually cause a correction in the share price, right? So my take is there's still a lot of expectation on the tech sector in terms of earnings delivery. And my take is I think the earning delivery will actually much likely to disappoint rather than to meet expectation. So I'm not saying that they're not growing. I'm not saying there's no growth prospect for them. I think there are growth prospect, but there's just too high expectation being priced into it by the market. The tech is the industrial sector, which is of course one of the sector which I think is a recovery play. And you look at it, the orange, although the index has actually gone up, recovered, but if you look at the blue line, which is the forward P, is actually on the downtrend. What this simply means is that when the index is up and the forward P is down, that means actually so far that the PE or the earnings delivery of the industrial is actually much better than what people expect, and actually that's why it actually went down in terms of the PE. So technically it became cheaper. Yeah. Plantation index, of course now a CPO. I'll talk more about CPO later. Again, the same thing is the PE was going down gradually simply because the earnings has been better. But I think a lot of people are wondering why that, although the earnings are getting better, but why isn't the index moving or why isn't share price? I'll touch more about it later. If I may, I'll excuse for a minute. Hang on for a while. Yep. Sorry. Okay. So this is the plantation index. Again, as I mentioned, I'll talk more on the plantation in a while. Next, of course, is the finance index. Again, you look at, okay, you notice that rather than using a PE valuation index for finance index, I'm using a price to book, which is actually a better valuation for finance stocks or banking stocks. It's on the price to book. And if you can notice, actually, the price to book actually has corrected quite substantially. Right, and I think again, this is one of another recovery sector which I think will be quite interesting to look at, simply because the valuation is cheap enough. This is not a recommendation to buy. Okay, right. Next, let's look at the global pandemic situation. So the first we're going to look at it. Of course, it is no surprise. Let's look at the ASEAN region, and of course, we have this on new confirmed cases, and this as of until 8 July, which is technically a few days ago, and you can see. We are number one, no surprise. I think it's all the headlines, and we are even much. If you look at in terms of gap between ourselves, Indonesia, Thailand, Philippines, I add in Singapore and China in as well. It's quite depressing. Okay, that's on new confirmed cases. The next we look at in terms of what is the new death. Right, again, we are still the highest. Of course, you have Indonesia catching up. Not something to be happy with. Not something to be proud with. And if you compare with, say, a global situation, like for instance, I take the G7, excluding China, because I already shown China. China is very, very well managed. So I'm looking at US, UK, Japan, Germany, India, and France, right? These are the world top largest economies. And it's, everybody is actually on the downtrend, except of course for UK, right? UK cases has been spiking up quite significantly. But whereas all other countries are actually on a very good downtrend. And in terms of death for the same economies, again, it is quite well managed on that basis. Yeah. Okay. Now, if we just compare the worst situation in the developed countries versus Malaysia, of course, in terms of new confirmed cases, recently UK overshot Malaysia, right? So technically, we are not world number one. I think UK is much worse than us. We are actually world number two. But in terms of death per cases, we are actually significantly much higher than UK. Yeah. Okay. Now let's look at in terms of global basis, right? In a global basis, this actually look at the global trend of between by region. Again, COVID actually, of course, there's a second spike coming up, but it's been quite well contained simply because of the rate of global vaccination that's going on. So I look by the region of new confirmed cases, right? America is actually on downtrend. It's Eastern Mediterranean region that's actually on the uptrend. Southeast Asia is actually on the downtrend, excluding Malaysia. African region is up, Europe is down, and Western Pacific is actually stabilizing more on the downtrend. So this actually explains where the spike is actually coming from, actually mainly from the African region and also your Eastern Mediterranean, or your Middle East region. And again, that of new confirmed death, again, is also on the downtrend globally, and you can see it again. Where are the death cases coming from? It's definitely more coming from the Western Pacific region and also your African region, right? But globally, it's definitely on the downtrend. Yeah. Okay. Now, this is something which I stress. I got this from the internet, right? And I deliberately put a very big source there. So this is not from me. This is from the source. So you can just click on the link there to have a look. This is quite interesting. That actually shows what the $1 million question, right? How much is actually the cost of vaccine? In terms of the range we're looking at. And it's quite interesting, right? You look at, in terms of per dose basis, Oxford or AstraZeneca, AZ is actually less than $10, $10 US per dose. Sinovac, the most you're talking about, maybe $60 per dose. Sanofi is $10. Moderna is between $15 to $35. Pfizer is less than $20 per dose. Johnson & Johnson is $10 per dose, right? Again, this is based on presented by Financial Times. So yeah, no, not from me, right? Where I find is something interesting to know, right? Let's talk about consumer confidence. This is actually the US confidence index. It's something very, very, it's optimistic that you can see that there's a very big, strong rebound in recovery of consumer confidence index. I think I always joke about this, right? I didn't even realize that AGT 2021 is on. American Got Talent 2021. Why is this significant? If you really click on AGT 2021, you realize that you have a massive hall with massive crowd, with no social distancing and no face mask. So it actually shows how strong or how confident that the US sentiment is now, that you can even have an AGT event ongoing without no mask, without social distancing per se. Right? So I think the AGT is actually a very good indication of confidence there. Okay. World Market Economic Outlook. Don't be surprised that a lot of this is actually from World Economic Outlook. Don't be surprised that you're going to see a very strong growth in 2021 in terms of world growth, GDP growth, right? Like for instance, you have US is forecasting 6.4%, Euro is 4.4%, Europe. It's simply because it's a low base effect. Because when you look at it in 2020, you look at the column in 2020, it's actually all negative. So it's not something surprising to actually achieve this kind of growth on the back of a negative year, right? But then again, it is still an optimistic sign that at least there is a strong growth in 2021 compared with the year before. Yeah. Okay. This shows the corporate earnings growth. Again, compared from Bloomberg. Okay, what it means is you look at three in earnings expectation for MSCI emerging market, S&P 500, and MSCI World, right? If you look at it, technically in the 2021 estimate, MSCI emerging market expecting the corporate earnings growth to grow around 20%. S&P corporate earnings is going to grow 35%. And of course, MSCI World profit is going to grow more than 41%. Well, again, as I mentioned, partially it's also due to a low base effect. But on the other hand, it's also due to the amount of stimulus that has been pumped in the market, which is actually stimulating a lot of economies globally, right? Or a lot of businesses, right? Okay, now, This again something I think is very interesting to look at. This actually what it shows in terms of Bursa market activity, net trade value between institution, retail, and foreign. This actually shows on a yearly basis what is the net trade value between these three categories of people, right? You look at for many years, technically in 2015, 16, 17, 18, or even 19, retail participation is actually very low. It's only until 2020 last year that retail actually spike up and retail technically become bigger, more trade in higher value than the institution. That's number one. Number two, that 2021 year to date is until July, and you can also see a very significant growth in retail. Okay, what these three actually combine together, if you add all together, it actually becomes zero. Because you look at market, right? One person buy, the other person must be selling. The other person selling, the other person might buy. So it actually shows the trade movement between institution, retail, and foreign. The next slide, I think, is even more interesting, where if we go for a longer trend perspective, we stretch back all the way to 20. Pardon the dates, actually 20. That's the next slide. This year to date on cumulative. Again, if you look at it, institution is on a year to date basis. Institution is actually the blue line. It's actually has been a net seller cumulatively since the beginning of this year. Institution have been selling. The gray line is foreign. They also have been selling. But who is actually buying up from institution and from foreign are actually the retailers. That's actually been buying, which is the orange line. The next, as I mentioned, if you look at on the longer trend on 2011, this is the reality of the trend, right? You look at it, technically the gray line, which represents the foreign, they've been actually on a net seller since 2013. Right? You notice that go all the way negative, all the way decreasing their rate, all the way negative 2013. All the while, if you look at it, before this retail comes into the picture, all the selling volume is actually absorbed by the institution. It's only until last year that you can see the retail start to absorb the volume of foreigners selling or the foreign selling. Okay. Next, a very important thing about local political scene. If you look at, for those who are wondering, if you look at the maps, I think this is quite well published, right? The current government bloc is there's 77 seats. Then if you look at just simply the Pakatan seat or Pakatan Harapan seat is 89. So there are a lot of people wondering why isn't there is a change? Why that the PN is still the government? There are a few things that we must bear in mind. The first thing is, if you look at it, UMNO itself is 38 seats. Although UMNO officially have announced that they are withdrawing support, but then they're leaving to the members of parliament and UMNO to actually vote whether, or they have their own choice to actually decide whether to support or not. And like it or not, I think a big chunk of those are actually maintaining their support for Perikatan. So that's why, although you see officially that the bloc president is only 77, but if you add in those MPs from UMNO, they're actually much higher than PH. That's number one. Number two, even assuming that the individual UMNO MPs did not support PN, right? There is this case of what I call as a minority government. Minority government, to say, if you look at it, the bloc, the opposition bloc is not united. It's not a single voice. So that means in the lack of a single voice, the PN bloc is still the largest bloc, although it's not the majority bloc. So under this kind of situation, yes, PN can still be the government as a minority government. Is this something rare? No, actually. It's actually quite common. If you look at even on UK itself, there's actually a few times that, a few occasions that the government actually run on a minority basis. Yeah. So again, don't expect anything to happen. This means you're likely to look at, I mean, what we are in the stage is actually a minority government. Okay. Now, as I mentioned, hot CPO. I think early this year, I did mention again that CPO was rallying. If you look at on the gray line I highlighted was all the rally in the CPO. I think that is likely going to cool off, and you can see recently it has been cooling off. A part of the big reason is because, see, CPO actually tracks or follows the price of soybean oil, right, or soy oil, right? It's always the biggest competitor. And one of the reasons why CPO price is rallying is, of course, soy oil has been rallying for early part of this year. But there's going to be a lot of plantation coming into soy oil, soya. Let's call it soya for easy, right? For soya, right? So the expectation by second half of this year, soya price will actually correct or normalize, and therefore it's likely to pull CPO price down as well. So that's the reason why, despite a very big, strong rally in CPO, why hasn't the plantation company in Malaysia experienced the same rally as the CPO price? Simply because people are expecting that the second half to correct. Next, we talk about crude oil futures or oil. One of the major headlines last year was, of course, you look at in terms of April period, suddenly the oil price went negative. So the reason why I bring this up is actually the oil price didn't go negative. The oil price futures contract went negative for a single day, right? Futures contract simply means that the person who was supposed to take delivery of the oil on that day, they don't want to take the oil. So what happened on that day was this buyer of the contract, they are willing to even pay for other people to take the oil. So that's how it became a negative. So oil price didn't become negative in April last year. Oil price futures contract became negative, but it was only for a day and before the whole thing rebounded. So this is actually the real oil price, which is the Brent oil price. Again, we look at it since 1988 to all the trend, right? And as I mentioned, the lowest event was $20. It didn't really went negative. Okay, what I did was, let's look at the period that's shaded in gray. All this period actually represents period where the oil price actually spike up, right? So you have, sorry, let me check. I got my message. Okay, so you have 1999 spike, you have the year early 2000 spike, you have the 2009 spike, you have the 2016 spike, and you have a 2020 spike, right? I think the million-dollar question people will ask, what actually caused the spike in oil price? Sometimes we always think about supply, right? But what is interesting, if you look at the next chart, which actually shows the supply and demand condition of oil, right? Way back to 1997, that's the furthest I can go. Supply, this on a daily basis, oil price, supply and demand are communicated on a daily basis. Mean to say, this is a million barrels a day. So if you look at currently, you are looking at number of 95, 96 million. Mean to say, on a daily basis now, 96 million barrels of oil are being produced on a daily basis. Demand is also around there, around 97, 98. So mean to say, every day, there is a consumption or demand of 98 million barrels a day of oil. So all supply and demand are always mentioned in terms of million barrels a day. Okay, so now, this one actually shows from 1997 to most recent. And if you notice, the same grid, the same area that is shaded gray are the period where the spike in oil price that I shown in the previous chart. So these are the gray shaded area, and these are the gray shaded area. So what's interesting, you look at it, right? It was during those period, you have a situation of demand exceeding supply, means that there is a short of supply. That's actually causing the oil price to spike up. But notice this, the deficit or the shortages never last for long. Supply has always been able to catch up in terms of the demand. So like what I'm trying to say is that you look at in terms of the long trend, right? Supply and demand of oil actually quite matches each other. Right? Of course, not a perfect match, but no, it quite matches. So there is really no shortages of oil per se, right? So what is causing the oil price volatility, as I always mention, is more on financial instrument, derivatives like your futures contract. That's actually what is causing more of the volatility, not so much of the underlying supply and demand. Okay. Now, one thing when I mention oil and gas, what is interesting or what we must mention is actually the net zero. Okay, what is actually a net zero? Net zero is actually a global timeline for the world to actually reach a net zero emission, okay, by 2050. Right? If you look at this chart or this timeline chart, okay, mean to say by 2050, right? For every carbon dioxide we emit as a world, be it from any industry, we must also reduce it to zero. Means It become net zero, means whatever you add CO2 to the atmosphere, it must reduce it to become zero. So that's the first target. Okay, after 2050, it become taking away the existing carbon dioxide away from the atmosphere. So become a net zero GHG or a net zero CO2, and that's where the timeline is. Okay, so what this actually means is that now the world is actually moving towards reducing carbon dioxide emission so that it became a net zero situation by 2050. So now you can understand why there's all this craze about all the green movement, all those electric movement, and so on and so forth. Actually, it's going to push the world towards a net zero situation by 2050, right? So, what are the implications of oil and gas? Of course, on one hand, we may think that this will actually have a negative impact on the demand for oil and gas. But then there's another perspective to it. If you look at it, right, what's happening now is you have all these major oil and gas players. They're starting to dispose of their oil and gas assets or their production assets, right? Okay. But what it simply means is, if you really think about it objectively, right, my take is this will actually drive up oil prices. Why? Okay. Whatever that's on focus are the listed oil and gas producers. Because they are listed, there's public shareholders, there are a lot of disclosures, and there's a lot of pressure that can be asserted to them. But like it or not, there's another hand of bigger players are state-owned players. Meaning to say, oil and gas producers, they are owned by governments. In terms of total production, right, the reality is this. The listed oil and gas players only contribute maybe 15 to 20% of global oil production. Whereas the balance 80% are by either private entities, unlisted entities, and also state-owned enterprises. Okay, now, by pressuring on these public entities, they are going to dispose the assets, right? And they are not going to invest in new assets. So that will actually shrink the supply. But on the other hand, the state-owned entities, they are not under pressure, or they are not being able to be pressured, or my better way to say it, that they will gradually buy off this asset, and this is exactly what we're seeing now. So what you're seeing now is there's a lot of state-owned companies and also private companies that are actually snapping up all these oil and gas assets. Okay, now, on the other hand, the next question is, are the green energies ready to fill in the gap from now until 2050 to move towards a zero oil and gas reliance? The answer is no. So what it means is that from now until 2050, you're going to have a downtrend of supply, whereas the demand wouldn't fall as fast as the fall of supply. So my take is this: because of this situation, I think the net zero movement or the net zero agreement is likely going to have pushed the oil price up further in that sense. But this is not a short-term thing. I'm saying it's a gradual, and from now until then, oil price is likely going to sustain at a high level, right? Because of this. Okay, next we talk about resin prices, the raw material for your plastics, right? And we are looking at the LDP and HDPE, the two most common resins in the market. There was a spike early part of this year, simply because of one of the biggest impact actually in Texas, US, one of the largest, one of very, very large production of petrochemicals in the US, the largest in the US and one of the significant in the world. The extreme cold weather actually forced power failure, and we shut down the facilities there, and that actually in fact affected the global supply of resins. That's why you notice there's a very, very huge spike up in both prices. But what you're seeing now is the prices actually come to tapering off. So my take is that both resin prices is going to stabilize going forward. Freight rate, one of the biggest challenge to economic recovery. That is my take. Again, if you look at in January, that when we presented this, January, we are actually talking about freight rates. Our global index is now 4,000 index. As we are talking now, it's already 6,000. So over the last 6 months, freight rate has actually increased by another 50%. What is happening is causing a lot of disruption in terms of cost, also causing a lot of disruption in terms of cargo movement, right? This is actually not a very good thing, especially for those who are doing in the exporting business. That's why you look at quite a lot of export-oriented companies, they're having their margins under pressure. This is actually one of the big reasons behind it. Okay, what lies ahead? Looking at what to watch out for. Globally, I think that I don't believe that there's going to be a recession. So I think there's no recession or major market crash in sight. To me, at most you are going to have is a correction and not a recession. Even locally, I think we must be prepared to see further inflation. And this inflation is not because of demand, but it's because of supply push. What I mentioned is due to inconsistent lockdown policy effect. For those who are running a business, you know that over the last few weeks has been a pretty difficult period to run a business. You can have MITI coming to say that you're allowed to operate. Then a few days later, your KKM comes say you can't operate. Or you can have KKM coming to say that you can operate, and then MITI will come and shut you down, or the police will come and shut you down, right? So this is actually causing a lot of supply disruption in the market. That's why if you go to the market now, a lot of things there's no supply in a lot of things, because what is causing the situation is I think a lot of people, operators just got so fed up, they just refuse to operate. That's the easy way then to deal with all this nonsense, right? You can open, you can't open. So this is actually going to cause some inflationary pressure locally. Market valuation is key. Market mean to say our valuation is still decent generally, but then in mind, don't overpay for growth. Don't jump into sectors which they are already in a very high PE level. Watch out for that. And I think recovery sector is still the sector to look out for. Yeah. The positive side about Malaysia now is at 300,000 per day vaccination. We're actually the second highest in the world after UK. And we work out simple mathematics. If we are able to sustain this 300,000 right, a day, within a month, we actually have more than 30% of the population being injected, which is actually a very good sign. That's why for me, initially, for those before, I'm been saying that I'm expecting a recovery or a more opening of market economies by August and September. But of course, the recent May surge actually pushed the whole thing to November. So I'm still optimistic. I think our economy will actually be back on track by November this year. Yeah, not next year, this year. Okay, for those who are first time joining us, what is Panoramic View? Panoramic View is actually our monthly sharing session. We actually have it at every last Sunday of the month at 8 o'clock to 9:30 p.m. So what we do is we actually sum up what happened in that month, the major things that's happening globally that have market impact. We also take some time to actually discuss about some of the industries that's happening. Like this is February Panoramic View. We talk about there was still a lot of disruption in the market, so I think it has the dust settled. We also talk about whether feng shui or the Chinese zodiac has an impact on the stock market, right? We actually use data analysis to show whether does feng shui or the year of any animal, whether is it a plus, the element is a metal animal, whether those really have an impact on the market, which was shared in the February session. In March, we go further down, and then March was quite volatile. So we actually trying to answer whether is it a time to panic for investors. April, we actually go more on the value chain of technology. So for those who wants to know more about the technology value chain, I think the April session will be quite useful. We actually goes into what is the Malaysian value chain for the technology looks like. So you can have a better understanding of which listed company is actually falls into which sector and what is the dynamics that actually affects their business. In May, we call interest was actually auto sector. So we talk about the dynamics of the Malaysian auto sector, right? And what are what in this value chain, which ones still have future or worth investing into, and which part of this value chain is actually not that attractive anymore. And recently, last month, we actually talked about telco, the telco industry. Again, we zoom into the Malaysian telco industry to let investors actually understand the business dynamics of Maxis, Telecom, and so on and so forth. And we also shared our view about going ahead. Which of these companies are likely to get better, of more investable potential, and which one we think that is actually quite challenging. And sometimes we do some extra session when I go crazy. We actually did one session about purely talking about the national car. What we are doing is actually not talking about, okay, what we did was actually we look at the history of our P1 and P2, or Proton and Pro Duo, their roadmap, their history, what went right, what went wrong, and how they ended up being where they are today. So this is generally what is our panoramic view. It's actually a monthly session. And the subscription there's actually only three package, which is very simple. The first is the annual package, or it's a 12 session package, which is 2,888 for 12 months. Okay, there's no limitation of video replay. It means at any time, if you want to replay the previous session, you can actually replay. So assuming if you were to subscribe now, you can even replay all the way back to the February session, March session, unlimited, right? The second is we also have a pay-per-view subscription, meaning to say if you're only interested to view for that month, you are not interested to subscribe for 12 months. So it's 216 per session. So in that month, you're actually able to view that session live, and also that replay is available for you for the next 6 days, right? The third package we have is what we call as a post-event, where the replay will actually start on the 7th day, after the monthly end. On the 7th day, the post-event replay package will be up, and it's actually for 50 ringgit for 7 days, right? So it's to be launched on the Saturday after every event. So this is basically the package for panoramic view. Before I go into the Q&A session, this is actually our social service. What I've been busy with for the last few weeks. For those who know me, I've been pretty quiet sometimes. Yeah, so apologies. This is actually what I've been busy with. This is actually from a mother project. It's actually started by my guru, Anand Kriyalakshmi Deviar, the lady in the picture. And what we do is we actually provide 1 month worth of provisions to the families that are affected by the lockdown. And you can see behind her, those are the provisions that we actually provide. This project actually started during the first MCO last year. And in the last year, during the MCO 1 and 2, in totally, we actually have supplied to 1,525 families and homes, meaning to say orphanages, and even old folks' home, or even special homes, right, of all races, and even refugees. Average per pack, we provide around 250 ringgit, because it's actually to last them for a month. Later in the picture, you can see what is included. Because this MCO 3, I think we all know that it's actually hitting everyone much harder than the first 2 MCO. So my master actually started this project 3 weeks ago, and so far we've already distributed provisions to 481 families in the last 3 weeks itself. So what we do is, these are the provisions. This is our hall, and notice these are the provisions that we provide. Part of it, there are some of it you can see in the subsequent pictures. This is usually my job, is to go and buy all these items. You can see from the whole row is actually the provisions we bought from suppliers, right? And those children who are staying in the ashram, this actually in the ashram also helps to actually carry and pack. And please don't call us for child labor. This has nothing to do with child labor. These are all volunteering work. Yeah? So please don't be aware of that. And these are some of the items that they are actually involved in packing of it. And these are the distribution process. As I mentioned, we did distribute across the board. There is a process for them to call in to apply. We will then check about their details, and then they have to come and collect themselves. We would actually like to distribute, but because this time the pandemic is pretty serious, that's why we are actually controlling by asking them to come and collect the provisions. And this most of them actually come by motorcycles. Not that they want to, but as I think in one of my Facebook posts, I said, as much as people want to come more comfortably to be able to carry the items, I think we must be aware that actually not everyone have the ability to get a car. Yeah. These are some. I secretly went to another place to distribute, because these are Pakistani refugees. They are not able to come. The most they can walk. They don't even have a motorbike. So I secretly went there to distribute. So please don't report me. Yeah. Yes, rain or shine, even the last few days, heavy rain. My master didn't stop the project, because if someone is hungry, they are hungry. So even under heavy rain, for 1 hour plus, we actually still continue to distribute the projects. There are some very interesting, heart-touching stories that come in my involvement in this project. Of course, this picture was a lady. We noticed she's pregnant, but what happened was on the way she would come and collect, she got to know her son got into accident, a little kid, right? So she was crying while coming to collect. So we actually give her priority. We actually let her cut the queue. We actually supply to her and actually let her go quite fast. This is another very interesting story. For those who follow my Facebook, this actually parish, which I mentioned, because somehow my master kept asking him to take a Grab to come. And the Grab he took come to collect his provision. The lady end up to be someone who is not able to talk. Then she start to show sign language. What is this about? So we actually explained to her that we're actually giving provisions to those affected. Then she, using sign language, right? She can't talk. So she actually asked, how can she apply? So actually on the spot, Master actually gave her a set of provision. Of course, we jot down her details, her IC and the contact. And she insisted on taking photos with us. So this is actually her. So what was interesting is how one thing leads to another. And how this guy is able to bring another person who is also in need of help to come to get her fair share of provisions. For those who actually wish to support this project, these are the details. You can actually do transfer to actually the society account, KMSG Charitable Society. Actually, KMSSG is an abbreviation for Kriya Lakshmi Mandir Sri Sai Gurukul. That's what the KMSSG stands for. So for those who are doing a transfer, don't be surprised if you see Kriya Lakshmi Mandir. Actually, that's what the K and the M stands for. Our account is under Maybank account, and this is the account number. So this is the end of my presentation. I will now go for Q&A. Yeah. So let me see the questions that you have. Yeah. Oh, I saw angry faces. Okay. Yeah. Okay. Let me see. Okay. Let me see. Sorry, let me go back to the question one by one to say. Okay, from Sean, the semiconductor sector is still very hot, trading at premium multiples. I'll say yes. It is still very hot. That is where lies my concern is. Expectation, as I mentioned, when it's very hot means expectation is very high. The company can still deliver earnings growth, but the risk is if the earnings growth does not meet investors' expectation, I think that's where a correction will actually come. That's my take for that. Yeah. Next from Mike Chow. Unlike last year when momentum drive retail buying in due to excess cash, this time around people really need cash for survival. With such depressing surrounding in Malaysia, do you still have confidence in Malaysia-related stock? Okay, your answer, there's a multiple perspective to your answer. It's not a straightforward answer. The first thing is, yes, I think if you look at the chart last year, right, retail participation has definitely surged. And this retail participation is when, okay, Malaysia, we are still quite high. We are still quite high in savings rate. Of course, I can't say for all, let's exclude the B40, right? Because those have no savings rate. But look at anything but the B40, technically, Malaysians will still have savings, quite substantial savings. Our savings are actually quite high. So this are the cash that is being used to being participate in the market. So, and earlier I had the same view as you. I would expect because of back to work environment and because of this MCO, which is hitting harder, I was initially expecting the retail participation to actually gradually drop. In fact, that's why I show the chart. What is surprising is the retail participation is not dropping. In fact, it's still getting higher and higher. Whereas those that the category that's exiting the market is actually the institutional and also the foreign. To me, I'm quite concerned about this because no offense to anyone, but I think the risk is always retailers tend to jump into stocks without really understanding what they're buying into. And this is where I think that when the thing corrects, it's going to cause a lot of pain to a lot of retail investors. Right? The other perspective is my investment thesis has always been, I always avoid companies that rely on government to grow. So any government-related stocks or any stocks where they're relying on the government business are usually the stocks that I avoid for exactly the same reason that it's pretty depressing. So what I prefer are companies where they do their own capabilities, they're actually able to grow their business, export-based, they can become global champions or fight with other countries. So this space, honestly, there's still a lot of good quality companies that are actually in this space where they don't really need government business and they're actually not purely relying solely on Malaysian to survive, that they're actually quite dominant in exporting their products to other parts of the world. So that's why there's a multiple aspect to your answer. Yes, there are some sectors in Malaysia that is depressing. Generally, it looks depressing, but there's always pocket of opportunities when you start to look at companies that are actually able to actually compete globally. Would saving rate in nation rise post-recession or crisis? How does this affect short-term, medium-term GDP? No, because these are the time where, okay, we say post-recession. In terms of the US, yes. You look at in 2008, before 2008, right, US saving rate is one of the lowest in the world. Very low. But after 2008, that the savings rate, I can't remember exact number in my mind, but the US saving rate actually rebounded, actually growth increased significantly after 2008. I would say the answer is yes. How does it affect short-term to medium GDP? It depends on how, it's not going to surge immediately, right? It's all of more of a gradual change in habit, right? You start to save more, right? Does it really affect the GDP in medium term? It's not going to be an immediate impact on GDP. You're not going to see, suddenly people are saving more, your GDP is going on the downtrend. You look at GDP, technically, you think it generally half. Half of it actually comes from consumer spending, half it comes from economic activities or industrial activities or services-based perspective, right? So long and short, no. Okay, yes, post-savings rate, post-recession will generally increase, but it's not a negative impact towards short-term GDP. I hope I answer your question. Strange, the chart looks blurred. I'm going to blame on Microsoft. Oh yeah. Okay, yeah. Sorry, the chart actually go smaller. Okay. Wait. Let me go through questions. Okay, big now. Yes. Sorry. My bad. Not good. Wasting. What sector do I consider as a recovery sector? I think recovery sector is, of course, bank is definitely one recovery sector, because you see, Malaysian bank was still quite conventional in a sense. It is the loan that's actually driving the bank's business. Your business loans, your SME loans, your hire purchase, so on and so forth, right? It's still very conventional. So, and working capital loans, not forgetting about that. So when economic activities start to resume, right, you can see that, these are the activities that are going to increase. The second recovery is actually industrial manufacturing. Like I said, not a lot of factories are not able to produce because of this lockdown, this and then, blah, blah, blah. So once all this nonsense is over, they can really start to operate on a very more smoother basis. The third was consumer, right? Now you can't go to stores to buy things, right? We talk about malls and things like that. But once, I think, of course, on the counter argument, you're saying that people can go for online. But you see, there are some things where you can't really go online. You look at the statistic in the US, right? The bulk of the online purchases are still mainly electronic items. So there's still a lot of part of the items that you want to go to stores to buy on that basis. What do I say? Economy back on track. When there is really no lockdown to talk about, not full lockdown, and when companies and business are able to actually operate on a more smoother basis, right, without having all this really kind of kacau you to shut down and things like that. And malls are able to open, places are able to, food eateries are able to open. That's what I mean by economies are back on track. Can we view back those previous clips? Yes, actually, all the previous clips are available as post event. If you go to our website, trident-analytics.com, all the previous clips are actually post events where it's actually for 50 ringgit. You can actually view all the posts one by one. Each clip is actually 50 ringgit for each clip. And if you and for each subscription, it can actually last you for 7 days. Means for the next 7 days, you can actually replay as many times as you want, right? But if you subscribe for annual or 12 session, which is 208, there's no additional cost. There's no time limit, there's no time restriction, there's nothing. You can view as many times as you want. Deleted session, no. There's some session meant to be deleted because it's too sensitive. From my child, awesome charity effort, probably get donation receipt for tax purposes. Okay, we are still in the process of trying to apply for a tax exemption status. As you know, the challenge is, I'm not sure, okay, the challenge is this: tax exemption status can only be given by MOF directly, Ministry of Finance. So you have to apply directly with the Ministry of Finance. And you know, there's been quite a lot of changes for the last few years, right? And yeah, we're still working on that. So unfortunately to say, we have not gotten the tax exemption purpose, but If you need receipt, yes, therefore we can issue you a receipt. Yeah. Bradley can say, working on charity and population for ultra, but what's your view on the notion of growing middle class in emerging markets, namely countries in Southeast Asia? Is it possible, or is the rich-poor divide not cease to exist? I think we also come to the measurement of, I think the challenge for all this data is always, how do you measure middle class, right? Different country have a different level of middle class. Let's take example, right? If you earn 2,000 ringgit in Malaysia, you can't do a lot of things. You can't do a lot of things. But if you earn 2,000 Sing in Singapore, like for like, don't convert, don't go and multiply 3 times 6. You earn 2,000 Sing, you stay in Singapore, you can buy a lot of things. So I think that always the challenge is, how is the middle class being defined, right? I think a lot of research going on saying that there is this growing middle class, right? Then my question always is, what is the measurement to derive to classify them as middle class? If it's solely based on the earning power, have they factored in inflationary pressure? So you may be a middle class in terms of your earning power, but your purchasing power may not be of a middle class. So you see where I'm coming from? So that's why sometimes all this economic research, we really need to take a step back to really relook at the methodology and the concept. As interesting as they may seem, sometimes there could be a lot of hidden aspects which may not point to the right picture. Okay. What are the factors that triggered my optimism that market has bottomed or near its bottom? What are the near-term catalysts that should re-rate the market in the remaining of the tour? I think the recent lockdown has actually been quite depressing to the market, right? Initially, I was expecting a much stronger market performance until March. Let's be honest, right? That's why I said after spring, until spring. But that didn't really happen. That the strong growth did not materialize as what I expected. So that's the first thing of the whole concept of why I think I'm more optimistic. That's number one. Number two is the current vaccination rate, I think, is more optimistic, right? Of course, they have no direction of when to end the MCO, but I said the only comfort is the current rate of vaccination is actually very, very, very optimistic. That's actually good. I said within 1 month, you can see actually most than 30% of the population is vaccinated. And that, I always stress that the only solution to decrease the daily cases is actually vaccination. There's really no other solution to actually counter the daily cases, right? Well, the near-term catalyst, as long as market opens, economy opens, like kind of activities open, when you can see more activities happening in the economy, happening in the market, right? To me, that will be the catalyst that need to re-rate the market. But when I said re-rate the market, bear in mind, re-rate the market of the sectors that has not performed, right? Because there's really not much expectation being put on those sectors. Nobody's looking at consumer sector, nobody's looking at industrial, nobody's looking at finance. But once the economy start to happen up, I think these are the sectors where the activities is likely going to surprise people. And therefore, it is that surprise element that is going to re-rate the market. Ken Chi, will Bank Negara further reduce overnight policy rate? What do you think about the outlook of the financial sector? My take is over the next 6 months, it's likely going to be stable. Unless right, the vaccination go haywire, the recovery rate did not happen, and instead of November having a much economic activities, the whole thing is delayed to next year. Unless that happens, right, that will actually warrant more cut. But since I'm not expecting that to happen, I think likely it's going to retain. So we must understand this. Interest rate market works very weirdly between the reality and the market. What I mean by reality is this. You see, financial market always celebrate or be very happy when there's interest rate cut. And market usually very upset when there's an increase in interest rate. Let's look at the recent Federal Reserve in the US, right, where they indicated increasing interest rate and the whole market just go down. But see, market can be quite irrational. If you really look at the Fed direction. What they're saying is they're looking to increase interest rate in 2023, which is technically 2 years from now. They're not looking to interest rate immediately. But because of the increase in interest rate, right, the whole thing just go. And they got a term for it, they call it a tapering tantrum. Right? But let's take a step back and look at things on a more objective perspective. Right? If you ask yourself, if you're a central bank, under which condition would you cut the interest rate? And under which condition will you increase the interest rate? Okay. You will only increase your interest rate if you're confident that the economic condition is good, that the economic condition is strong enough to absorb the higher cost of the interest rate. True? So that means as a Federal Reserve or as a central bank, you only increase interest rate when the economic is performing, that is strong enough to absorb the additional cost. When will you cut interest rate? You will cut interest rate when you think the economy is weak, that it needs stimulus to actually stimulate the economic activities. Then you'll cut interest rate. So if you look at this perspective, right, cutting interest rate actually shows a weakness in economy, whereas increasing interest rate actually shows a strong economy. But markets tend to work the opposite direction. Whenever there's an interest rate hike, whereas investors should be happy that actually economy is getting much better, they sell down on shares. Whereas when central banks start to cut interest rate, where it's actually a sign that economy is actually weakening, the share price actually goes up, right? So that's why we have to be objective when we really look at things. Right? That's why understanding the fundamental aspect of things is actually very important. Yeah. What is the sector that considers recovery factor? Okay, sorry, I understand. I answered that question earlier. So I just clicked before reading. I clicked on everything. Now, there's any difference between split and bonus? Honestly, nowadays, because they changed the accounting requirement. Previously, in terms of accounting requirement, between a split and bonus, there are differences. But nowadays, there's not much difference between a split and a bonus. The difference is more on the methodology of implementing it. But on the net impact on investors, actually, there's no impact. Right? It's a bonus issue, there's no bonus, right? If you read my book, I already mentioned, actually, I think bonus issue is a very misleading concept, terminology. You say it's bonus issue, but in reality, there's actually no bonus. You're not getting any bonus. Thanks, Christopher. Thank you very much. Yeah. So this is the account. So we really need the support to actually continue with this project. Yeah. Am I optimistic about the world able to control pandemic, the COVID variants? My answer is yes. Is variance something very surprising? My answer is no. You see, ultimately, coronavirus is actually a flu. And flu actually mutates pretty fast. Right? That's the first aspect. And as long as the world moves towards everybody, or every country, let's say, move towards more than 50% vaccinated, right? Or in the lab, we call it herd immunity, will actually work against that variant. So honestly, I'm not so worried about the variant unless the variant became much more widespread before the world can be vaccinated. Each country can be more than 50% vaccinated. I think that's why I said the answer is the vaccination is actually the key. Yeah. Okay, I got a personal question. Sorry. Are you a vegetarian? I am a vegetarian. Yes. For the last 10 years. Yeah. So yeah, that's the question. Yes. Sorry, let me go to the next question. Sorry, I missed out a few questions. Sorry. Okay. Suggest to have the options to able to select all panoramic view as well. It's there. I mean, if you go to the trident-analytics website, all the old past events, past sessions are all posted there. Because, okay, personally, this is my personal view. I think those sessions are actually quite valuable, right? I think to me, ultimately, my dream for trident-analytics website is it's going to be an archive of all the information of the past sessions. Like now, for instance, right, we have a session about auto. You don't know about auto, just go back to May, you just watch the session, actually explain to you in detail about Malaysian auto sector. You don't know about semicon, you watch the April session. You want to know about telco, you watch it. It becomes, as the time goes by, right, it will be an archive of information which investors can actually go there and actually view it. Yeah. Okay, sorry. What is example recovery? Okay, I explained that. Yeah, sorry. I clicked before I read, so sorry about that. Okay, what about your dry bulk shipping sector in 2021 second half May bulk? If you really analyze May bulk's number, right, bulk shipping is actually quite a difficult business. It's not a very high margin business. If you really trace back May bulk's business, you have to do more analysis on the income statement. You realize that for companies like May bulk, a lot of their profits actually come from disposal of their ships. Meaning to say, when they change their vessels, right, or quite ships or vessels, I mean the terminology, quite ships, easy to pronounce, right? When they sell off their ships, actually a lot of gains actually comes from there, not so much on the business of dry bulking. Of course, now with all the rates are actually very good, but see, my take is this: if you replay back the January session that I actually shared, it's available for public. You can go back there, to either through Facebook or go Trident-analytics website. It's free for viewing. I did explain that one of the reasons why freight rates, be it bulk rate or even container rates, are going up, right, is a big part of it is due to lockdown. Because all this lockdown globally are actually affecting the capacity of ports globally. So when the capacity is down, the turnover around time is down, it causes the whole impact on the value chain, right? So my take is that once the world recovery is on place, back to that, once the more activity globally happen, and ports efficiency will increase, and this will actually free up a lot of the capacity, which I think then will actually gradually normalize where the freight rates and the bulk rates. But definitely the next few months is still likely to sustain high, but I don't think it's going to be a prolonged trend. I mean, prolonged trend is it's not going to be sustained in this way for the next 12 months. Yeah, I'm more in the view that freight rate will gradually come off, gradually. I mentioned about world liquidity. Any idea how to check this or how to view this? Actually, it's quite easily available data. In terms of liquidity, you can actually check US Federal Reserve website or even their respective central banks website. Right, you know, each states have their own website, so it's actually quite easily available data. Yeah, you can check from there. Yeah. What keeps me awake at night? My favorite question now become people's favorite. Actually, used to be my favorite question to other people. Now it's other people's favorite question to me. This is actually a very good question. It really depends on multiple things. Actually, there's multiple things, right? Of course, my favorite answer is trident-analytics, right? My monthly panoramic review session always keeps me awake at night, because I always wish to maintain the standard of sharing so that everybody benefits from every session. Nobody feel that they're not getting something out of it from every session. So that's what keeps me awake at night. But then again, if you really look at it on a more serious note, at this moment, I think what really keeps me awake at night is take the world indices, take US for instance. I always find that it needs a correction, not a sell down, but it needs a correction. But what is preventing a correction from happening now is there's so much liquidity in the world. You look at it, all the quantitative easing, or because quantitative, all the pump priming that's happening now, right? There's so much liquidity that is preventing the correction to happen. So I'll explain it's like a tug of war. On one hand, the correction needs to happen, but on the other hand, there's so much liquidity that's preventing it from happening. Right? So when this thing happens, when it cracks, it really cracks. So that's the first thing. Right? I am really looking for a correction, which I think is healthy, is much needed. That's number one. The second thing that keeps me awake at night is the retail participation in Malaysia. Don't get me wrong. Right? I mean, it's good to have retail participation, but my biggest concern is, as I mentioned earlier, right? If the retailers is jumping into the market with eyes wide open, they understand what they're doing, then it's good. But I think unfortunately, a lot of are actually just jumping in because their neighbors ask them to, their brokers ask them to, their good friends ask them to, so on and so forth, without really knowing what they're getting involved into. And when things correct, I think you will get a lot of pain, yeah, from there. Yeah. Sorry, give me a minute again. Sorry. Yep, sorry, apologies. And the third thing that came away actually is this time MCO. I think this MCO is really affecting the lower income group much more severely. Uh, I mean, it's all over the news. Look at it, the suicide rate is increasing. Things are definitely much more depressing now under this MCO. That's why I really look forward to the vaccination rate to actually continue to sustain or to increase so that we can really hit more than 50% vaccination, vaccinated as soon as possible. I think that's the only solution. So these are a few things that really keep me awake at night recently. Any comments on Malaysia total debt level? Since government keep issuing bond sukuk, is the level going too high? Definitely it's increasing. Or again, depending on what parameters or what denominator you're using. Our government debt to GDP is roughly depend on what kind of denominator you use, right? It goes around between 70 to 85, right? Depending on what parameter you're using. Is it high or not? I always believe this, right? Whether debt to GDP is worrying or not, actually it's not about the debt to GDP ratio. It is really more on how optimistic are people on the prospect of the economy. Okay, what do I mean by this, right? If you really think about it, if you assume a country is a company, okay, that is actually the borrowings of a company, correct? GDP or gross domestic production is actually the total revenue of the company. So if you assume a country is a company, that is the borrowing, right? GDP is the revenue. So in all economics, we have to use the word debt to GDP. What is the percentage? I mean to say, of the debt to the GDP, what is the percentage? And of course, most of the time for emerging economies like Malaysia, we always say 80% is high. Okay, now if I ask you this question, I assume Malaysia is a company, Malaysia Berhad. I'm going to tell you that Malaysia Berhad's borrowing divided by the revenue is 80%. Can you make anything out of this number? Or let me rephrase it, right? Have you seen anyone analyze a company using borrowings divided by revenue and then form a conclusion about the company? Because you notice there's actually no correlation between borrowings and revenue, right? That's what debt to GDP is about. So that's why you look at it. Why some countries like Japan, the world is totally okay, they are 200% debt to GDP. Yet their borrowing is 200% higher than their revenue. But whereas emerging economies, for some of them, well, even at 50% debt to GDP, you're not okay. So that actually shows that there are actually much more other consideration purely than debt to GDP for people to conclude whether a country or a company is okay or not okay. That's why I'm not really a big follower of debt to GDP. Yeah. Well, this is quite a long question. Right. Due increase in cost like raw material shipping costs, this mostly bring down one company earnings power. For safer play in coming next quarter, probably will be shipping companies as well enjoy a spike in freight rate. I explained earlier, you see, always when you analyze companies, right, you must always split let me think, is this a long-term trend or is this a short-term impact? You're totally right. The increase in freight is affecting the company's earning power. But the next question that you need to really ask is, what is your view? Do you think the freight rate is going to be a new normal? It's going to be prolonged at this level? Or is this temporary that is going to correct itself? Or is going to lower down itself? Right? So both have very different conclusion to make. If you think that this is the new normal for freight rates, then of course, company earning will be perpetually affected unless they adjust the price, right? But then again, if you think this is a short-term thing, it's a short-term correction. That company earning power will recover after this. Okay, now, market is very efficient. Market already expect that cost profit will be down. That's why market is not moving anywhere. Look at Malaysia. So market has already priced ahead that there's going to be a lower earning power because of increase in cost. So, and that actually presents the best time to invest in, because when the expectation is low, back to the word expectation. Right? You always safer for invest when expectations are low than to invest when expectations are high. I hope I answered your question, YG. In addition to net zero, what are the structural theme that we've been looking at? Meanwhile, how we should weight the trade-off between investing in a structural theme and high PE company. For instance, solar, the renewables are in structural growth, but at the same time expensive. Be it how hot an industry is, there will always be a cycle in terms of the sectorial valuation. If you notice, when a sector is traded at high PE, right, usually it won't sustain a high PE for a prolonged period of time. The PE will actually, there will become a period when the PE will start to correct itself. What will cause this? Back to the word that I mentioned, expectation. Because the sector will continue for too hot for too long, expectations are building up very, very strongly. All the company is just 1 quarter or 2 quarters of missing the expectation. You can see the whole thing can just tumble very, very fast, right? So yes, so the answer is, whatever you're looking at, you cannot escape or you cannot avoid looking at valuation. Valuation is actually very, very key to decide whether you should go into it or you shouldn't go into it. Yeah. What do I think of the steel sector? I think China's government has already started to come into the picture to actually control the overheating prices. But look at the steel industry. Honestly, steel industry in Malaysia is one sector that I don't really follow because of the dynamics. Okay, look at the dynamic of steel industry. Steel industry is very much, the demand is a very local demand. Mean to say, whether a country, Malaysia, are using more steel or less steel is on the projects, right? Be it your construction projects, your residential projects. So that causes a lot of steel demand. So the demand of steel is affected by local condition. But the prices are affected by international happenings or international events. You see I'm coming from? So because of this business dynamic, it makes the steel business very challenging. Okay, let's take historically, right? Why Malaysia's steel price hasn't been really going up, despite we have a lot of construction activities 3 years ago. I mentioned last 2 years now, right? We have a lot of construction activities, right? But why isn't steel prices good? But why isn't steel prices going up? Because China's steel prices are going down. So you are having a business where your local activities will not dictate the price. You can have a situation where local activity is very vibrant, you got a lot of demand. But as long as global prices are going down, the prices are going down. So that is one of the reasons why I always avoided the steel industry, because of this business dynamic. It makes it very difficult. How do you see the renewable energy sector? Depending on which renewable energy sector you're looking at. In Malaysia, of course, we talk about LSS or the large-scale solar, and now we're actually at the fourth one, LSS4, right? If you ask me what's my outlook, apologies, I mean, offend. My opinion is, at the rate LSS4 is going, the IRR is internal rate of return for LSS4 is actually at a single-digit level, which means it's actually not very profitable. When it's at a single-digit IRR level, the whole value chain will be under margin pressure, and there's actually no room for error. That a swing in certain parameters can actually reduce your margin even further. So long and short, yes, although solar has been quite a hot sector in Malaysia, I think there's a lot of risk and a lot of concern that I think investors are not seeing yet. This one I sure cannot escape one. Mentally prepared. What's your view of current growth sector? I'm thinking how to explain without offending anyone. Yeah, maybe I shouldn't. Okay. I started to warn about glove last year, July, right? I think that time was all-time high, right? You see, has glove found the bottom in terms of share price? My answer is no. Why? Okay, I'm trying to analyze it rationally if you think about it, right? First thing is, has anyone be able to say what will be the new average selling price for glove? Right? You take on average, purely on average, right? Before the pandemic, you're talking about $20 per carton. During the pandemic, depend on spot price, forward contract, whatever it is. Let's take an average. Let's take $80, which is again pretty low. I'm using very, very low estimate. So from $20 to $80, you're talking about 4 times increase, right? Now, the question is, going forward, what will be the new ASP? Of course, ASP will definitely not be $80 anymore. But what is the new ASP? I think that is the million-dollar question which no one has the answer, right? It can be 70, it can be 40, it can be 30, right? Okay, now, assuming that, you think that the new ASP will be $30. $30 is still higher than 50% higher than historical $20, right? But at $30, imagine from $80 to $30, that's more than 50% correction in terms of profits or prices of volume business, which translate into further fall in profit. So the biggest challenge for glove now is we have not seen what will be the long-term ASP. Actually, no one knows, because the correction or the drop in ASP has just started. It has not ended yet, right? So what I might say is, until more clarity on what will be the normalized ASP, I think we have to be quite cautious about glove. Not because of business dynamic, right? But it's really more of the ASP perspective, right? When would we be able to know what is the normalized ASP? Might take at least another 6 to 9, at least another 9 months before we can really sense what will be the normalized ASP going forward, right? But not forgetting at the same time, during last year's massive hype about glove, a lot of people actually jumped into the glove sector. So there's a lot of additional capacity coming by new players that is going to further disrupt the ASP, right? Because they have the money. You see, these people raise money from public to expand their plant. They have money to burn. They have money to burn for the next 2-3 years, which means they could be making losses for the next 2-3 years, but they are there in the market to disrupt the ASP for the next 2-3 years. So when I think about ASP, I think it's going to be quite challenging for the next 2-3 years. So until the dust is settled, when you can see where the ASP is, I think glove will become quite challenging. I still remember this incident. I think last year when one of the company was around $7 don't name names, right? Someone just asked me, hey, what's my take about the valuation? I said $3 plus, and they thought I'm crazy. They said, hey, they thought I'm mad. They said, no, it's 7 plus, right? We should buy because it corrected from 10 to 7. They said it's cheap. I said, well, yeah, my take is worth $3 plus. And fast forward, right? I think with the benefit of hindsight, I think now it's $3 plus. Right? Yeah. So I hope I answered your question. I'm trying to be as diplomatic as possible. I don't want people to throw stone at me. Do you think about shipping not normalize this year or get worse? The entire world are competing for cargo containers. Export containers will still continue to suffer, right? I would say yes, they'll continue to suffer in terms of the cost. But then again, it's depending on what type of product. Are the product they're able to pass the cost to the consumer or the end buyer, or they have to the buyer, or they have to absorb the cost themselves. Yes, it's going to be quite challenging for the shippers or for exporters. But as I mentioned, I don't see this as a prolonged trend. I think things will gradually improve as long as the world starts to open up gradually, right? Free up the port capacity. Yeah. Political curveball may cause the market to crash. Honestly, my honest opinion is, for those who want to see any exciting thing about Malaysian politics, that actually there's nothing exciting to see, to be honest. As mentioned just now, there's nothing going to happen. You prepare yourself to live with a minority government. I say it's not elite. It's legit to have a minority government simply because your opposition, there's no strong opposition, stay united to have a combined number that's bigger than the current minority government. So, curveball, I think there's no ball, unfortunately, in it. Yeah. How do I look at the Lam-Lam-mutated virus? Current Malaysian healthcare system has collapsed. How does it affect Malaysian economy? How do the overall GDP of Malaysia for this year? Since more factories are shut down during EMCO, export definitely get affected by shortage of port cargo. Yeah, definitely things don't look good this quarter. Let's be very realistic about it. A lot of factories have been shut down this month. Even I say, unfortunately, some who actually can operate and want to operate, but because of all this nonsense by, the authorities, right? A lot actually choose not to operate. So this quarter definitely is quite challenging in terms of overall economic situation. But as I said, we're always looking at recovery. With all these things again, I stress, the rate of vaccination will be the more viable answer to the daily cases. Yeah. Sorry. Asia, especially Southeast Asia, is spiking cases recently. Will this cause some global business chain interrupted and will this cause further spike in inflation? No, actually, Southeast Asia's cases are actually under control. Only some countries like Malaysia and of course Indonesia. Indonesia is the death that's increasing, but in terms of cases, that actually is actually quite under control, not as bad as Malaysia. So on terms of January as a whole, the whole Asia is actually on the downtrend. Global business supply chain is interrupted more on the container aspect of it, which I explained earlier that I think once the port capacity is freed up, become more efficient, that's going to free up a lot of container ports back into the market, right? So inflation is already happening, right? The inflationary pressure you see now, as I always said, is more due to supply push rather than, it's also a demand push, but I give a more weightage. Global inflation, okay, not Malaysian inflation. Global inflation is more affected by supply rather than demand. Because demand also play a role, but it's more of a supply push. But once this eases, right, it's going to normalize the inflation. Yeah. Thus, the act of insider buying shows confidence in particular stocks. Azizan Osman purchasing stock of MPay from market and private placement worth 20 million in less than one time. That's a very good question. Let me think how to answer first. Honestly, I don't follow MPay, so I don't know what is happening there. But I can comment is CC. I'm not referring to MPay. The comment I'm going to make is not about MPay. I'm just giving a general comment, general comment, right? It really depends on the management. You see, like it or not, on one hand, there are genuine management where they really buy because they really want to have benefit from the growth going forward. But there's another category which they know how to play the market. I mean to say, they know that if I'm going to buy my stock, I'm sending a very positive signal to the market and my share price will react positively. And therefore, I'm going to buy. You see where I'm coming from? No, I mean, I'm just being very realistic. That is, so the answer to it is really depending on which category they fall into. Both categories exist in the market. Right? So, but as I said, I don't follow MPay, so I really don't follow whether is it, is it due to confidence or anything. So apologies because of that. I missed stop. Wait, sorry. Is Darwin Asia Pacific growth stock or value stock? This is a very interesting question. You see, even a lot of, in theoretical, right, you can see a lot of papers say, okay, this is growth, this is value. But in reality, right, you know that it's actually quite difficult to actually categorize what's actually growth and what's actually value. Right? A growth stock can be also a value stock. A value stock can also be a growth stock. If you ask me in a very simple term, I would just say, yes, both are actually growth stocks, right? Because the growth potential will be good. Can they be value stock at the same time? I say, yeah, it can be value stock at the same time because when the growth materializes, the valuation can be cheap, right? Yeah. This is not a stock recommendation, please. Sorry. Have to disclaim that. Where is Malaysia's strength compared to countries in Southeast Asia? Will Malaysia still be able to attract good foreign and local investments? Our strength is the population. Let's be very honest, right? We are quite resilient people, and generally not to self-praise ourselves, but we are quite hardworking people generally. Our land transport connection logistic is an advantage. Right? The North-South Highway is actually a very hidden advantage. It's a very seldom talked about advantage. Right? If you notice the North-South Highway, it connects all the major ports. Your Penang port, your Port Klang, your Pasir Gudang, your North Port, your West ports, your Pasir Gudang. That's actually very important because if you position yourself as a production country or a manufacturing country, right, the access is very, very important. And this is one of the advantage we have over countries like Thailand. Thailand, you look at the map, right? Only the southern part of Thailand, there's a port access. The northern part of Thailand are all neighboring lands. Actually there's no port access. So that means that transportation costs, they may have advantage over us in labor costs, but they have a disadvantage over us in terms of transportation costs. Indonesia is archipelago, right? It's quite a nightmare in the port. Philippines, even no need to say. Manila port is always congested, and not to mention Philippines is quite island-based, right? So these are some of the advantages that actually we have. Not to mention, you can see it as a good thing or you can see it as a bad thing. We are always a melting pot where a lot of foreign people will come here to work, foreign laborers. You can see, actually, you can see it at both sides of the thing, right? You can see it's something that's not good. I'm against foreign laborers. I think that we should cut down foreign laborers, so on and so forth. But on the other hand, right, at least this country can really attract foreign laborers to actually come and want to work here. Right? Do you see PE contraction or a drop in risk premium in the coming next half of the year in US and Malaysian market? Depends on sector. That's why, remember earlier part I present to you the PE of sector. So there's no general answer to this. It really depends on sector because as I mentioned earlier, each sector actually shows very different performance, right? So it really depends on the sector. So maybe you just look back at the earlier presentation, then you can understand what I'm trying to say. Yeah. Foreign investors going out replaced by retail. Is it a good sign or other way? Foreign investors might continue to flow out after COVID, given that KLC remained the same as 10 years ago. Any opinion on this? See, unfortunately, the data I have, I was only able to compile until the 2011 period, right? But actually, if really track in the longer term, I think foreign have started to flowing after 2008. Why? Okay, I'm making this comment purely as an analyst on a very neutral position. Right? I'm not aligned to any political party, so don't get me wrong. You see, before 2008, right? What Malaysia has always traded at a premium compared to other Southeast Asian market, simply because of political stability. Because other than Singapore, Malaysia is the only country where we have a two-third majority in government. Right? So that political stability has always been the reason for a premium for Malaysia. In 2008, Malaysia for the first time lost its two-third majority in the government. So that have actually triggered quite a lot of outflow even since 2008, and it never really came back, right? Because once we lost that two-third majority, how different is Malaysia from Thailand, from Indonesia, from Philippines? Singapore is always close to absolute majority, right? But that's another story. So if you really stretch the chart back further, it's been always on the outflow. Now your next question is, all this outflow of foreign is replaced by retail. Is it a good sign? Then the next question is really depend on whether the retail know what they're doing, whether are they going into the right stock. Because see, these are value. It doesn't really measure which stocks they're going into. But if you really look at, in terms of the index and sentiment I showed earlier, right? All this money are not going to big caps. All this money actually going to all the small caps. Because big caps barely move, right? So again, one of the things that keep me awake at night, as I mentioned earlier, once the market corrects, I think a lot will get burned. Because unfortunately, a lot of retailers don't really know what they're getting themselves into. Yeah. In my Facebook, you mentioned PEG is not the best indicator for evaluating a growing company. Could please share your approach in evaluating growing company? Okay, PEG usually works this way. Okay, let's say for instance, they will say, if the PE is 50 times, right? If the growth rate is 50%, you take 50 times PE divided by 50% growth rate, ignore the percentage, just take 50 times PE divided by 50% growth, you get multiple of 1. So that means your price to earnings growth is 1, means it's good. If you're paying a 50 times PE and the growth rate is 100%, 50 divided by 100, it becomes 0.5. It's even better. But if your growth rate is 50, PE is 50, your growth rate is 20%. 50 divided by 20 is 2.5. It's not so good. But then again, really think about it. What you hope to derive by dividing a PE with the growth rate without the percentage. You see where I'm coming from? What is that correlation? What do you hope to achieve? Okay, yeah, the PE is 50 times. Divided by 50% growth, you get 1. What does that 1 means? Right. So in reality, okay, I hate to say this one. See, do read, okay, not do realize. I come from that market. What I come to realize was the only time when analysts will actually use a PEG to value a company is when the PE is too high for them to justify to give a buy call. So they'll be scratching their head, right? This PE is already so high, 100 times. How do I justify to give a buy call at 100 times? That's why they created this thing called, okay, let's compare to the growth. If I believe the growth is going to be 100 times, 100%, double, 100%, and the P is 100 times, hey, I can justify this PEG is only 1, it's worth investing. So actually, that's the whole reality of the market. Like it or not, for growth, non-growth, whatever, I think PE, a simple PE is still the best, right? It's actually a very good example. You want to buy a company at 100 times PE, by all means, go ahead, right? And you really believe that if the profit rate goes by 100%, right, your PE will drop to 50. It's as simple as that. But then you must weigh in the risk. How certain is this doubling of profit is going to be? Because if this profit is not going to be 50%, in fact, if it comes at the growth is only 75%, your PE only doesn't drop to 50. Your PE dropped to 80. So it's still a pretty high PE. So I would say that in valuation, likely the simpler the approach, the better it is. The more complex the approach, the less likely you're going to get a good result. Who will win Euro 2020 tonight? Honestly, I don't even know Euro started. I'm not a football person. Sorry. So I guess you'll be shouting the whole night. Actually, what's the view on petrochemical prospect in second half? Okay, my take, as I mentioned, the spike you see earlier this year is due to disruption, especially the extreme cold weather in Texas, US, that actually caused power shortages, which then affects petrochemical plants being able to produce. So that caused that disruption. Things are now more back on track on that basis, right? So I don't foresee the spike to happen again. I think going forward, I'm expecting petrochemicals to be more either on a stable to downtrend basis rather than an uptrend. There's still a lot of supply being created in the market, means new capacity that's still coming up, being constructed into the market. Whereas on the other hand, demand are still very tapering off. I say because of all this lockdown per se, the demand is not coming up, right? So long and short, I think petrochemicals price is more on a stable to downtrend basis. I hope I answer your question. How to define value investment and long-term investment? I try not to define either, to be very honest. The challenge is this. When I talk about value investment, right? I always say it's an overused word. Everybody is a value investor. I mean, you look at any media interview, any fund manager, right? You will notice every single one of them say, what's your approach? I'm a value investor. When we all jolly know well, they are not value investors like that. No, there's nothing of a trader. There's no. But it's become like a shield, right? Everybody say, okay, whatever, I'm a value investor. It's actually like, I don't know. So I say it's an overused word. So I was like to quote Charlie Munger actually gave a very good explanation of value investing very recently, I think a few months ago. He says, or I assume he said this, right? Not in exact to the words, but he said, everyone is a value investor. The only difference is whether they see value in a good stock or they see value in a bad stock. So everybody is a value investor. Again, I also avoid using long-term investment because, see, I explained in my book, I fall into this mistake myself, right? This actually comes from my own mistake that I've learned. Right? I used to think long-term investment means is measured by time period. Meaning to say, everything I buy, I must go for 3 years and 5 years. Right? Then comes a problem. Right? The problem is assuming, right? Assuming you buy a certain stock, you hope to achieve 100% in 3 years. Right? So, okay, I'm buying this stock, I think you'll return 300% in 3 years. So you enter with a long-term investment in mind. 6 months down the road, it gives you 100% return. What are you going to do? So are you going to tell yourself, I'm a long-term investor? No, I'm still going to hold on to 3 years. So even if it hit 100% in 6 months, you're not going to do anything. Or you become more realistic. Hey, look, I'm getting my 100% in 6 months. I just sell off. So I usually tell people is long-term investment is a concept more of what is the thought process, what is your intention when you invest into the stock. When you invest in the stock, do you invest as a trading or do you invest as a long-term investment? It's the intention that defines long-term investment. It is not measured by the time period you hold the stock. I buy this stock with the intention of 100% in 3 years. But if in the next 6 months it gives 100%, by all means, I'm going to sell the stock and take profit and go and invest in another thing. So that's why I always try to avoid trying to get into two definition based on what is value investing and what's long-term investment. Because ultimately, right, they are very theoretical concept, not so practical in real life. Next question. EBITDA is not cash flow measure. No, it's not. You see, EBITDA, it means earnings before interest, tax. Actually, there's another DA, depreciation and amortization, EBITDA. Modern finance like to say earnings before interest, tax, depreciation, and amortization is a proxy to operating cash flow. Modern finance. But in reality, it's not. Operating cash flow is not EBITDA. Right? So if you really go and compare companies' operating cash flow and try to adjust the EBITDA, you can see two totally different numbers. But why finance theory created, God knows. I really do. But answer is no. EBITDA is not operating cash flow. But unfortunately, EBITDA is being treated as a proxy to operating cash flow. When you mention raising price to stable for second half, does plastic companies like Dongguan and Sintex benefit? I think generally they benefit in terms of their cash flow. You see, when you buy resins, right, it actually takes your working capital cash flow. So when your resin price is high, you actually use more cash flow. But when resin prices is low, it actually frees up a lot of operating cash flow. Right? So I would say that in terms of cash flow or capital, working capital basis, right, a low resin price is actually good. Right? Yeah. Can you share with us your investment philosophy? I am trying not to create any new approach. Right? I'm a nobody, to be honest. I mean, I'm too much of nobody to actually create something like a new approach. But I always like to say that investment, I view investment as investing in the business. That is actually my philosophy. So that means in my decision of whether to invest in the company or not, I ask back the basic question. Do I like this business? Do I want to own this business in my portfolio? Because always view your portfolio not a portfolio of shares. Always view your portfolio as a portfolio of businesses. Right? So whether do you want to have this business in your portfolio? Do you think that this business has a long-term potential, or do you think this business is not sustainable in the long term? Right? So in really a lack of better term, I usually say it's a business-centric approach. It means I'm really approaching investment as investing in the business and analyze them as a business. What's the percent of acrylic sheet has increased usage in EV and solar panel? However, margin of Malaysian companies is not performing well. Oh, okay. As I mean, this is not so much of raw material. Freight charges. Actually, a lot of them are actually affected by freight charges because this it's quite export-oriented business, and freight charges actually hit them quite badly at this moment. Yeah. Where are we going, Sifu? Clear my throat. My cat kacau. No, not diarrhea. They got diarrhea. Yeah. How would insurance companies do in second half recovery as well? Insurance stock has always been a non-performer. I think it's it's not really in the limelight. That's always the challenge. I mean to say, insurance company has always not really garnered the attention of the market, and because they don't garner the attention of the market, they don't really command high valuation. They will actually trade at quite cheap valuation. So honestly, between banking and finance and insurance, I usually will go for banking rather than go for insurance. Yeah. Oh, what do I think of server dynamic? Everything can be dynamic. Okay, I'm just making a very objective statement. May I just run through the modus operandi of an auditor, right? Of an audit firm. You see, auditors will actually do their standard process, but when they uncover some areas where they need more information, or they suspect. I won't use a suspect, but they found there are some area which is questionable when they need to do more audit processes. to find the answer. This is something where the audit juniors can't do it themselves. They can't make a decision, oh, I'm going to do this more. Usually they need to present the cases up to the seniors, and sometimes, depending on the severity, even up to the partners themselves, that they need to do more audit work on certain things. So that only then the additional audit work will be carried out. So by the fact that KPMG went on the additional extent to actually check on the customers of the trade receivables, means there are already some grounds for them to do the additional audit work. You see I'm coming from? Right. And again, for a big company like KPMG, for them to make a public statement, if you try to stand on their shoes, right, if they are not absolutely sure of their grounds, would you think they dare to risk their reputation to actually do that? Imagine if subsequently they were found that there's actually no audit issue. The whole global, it's not about Malaysia KPMG, the whole global KPMG reputation is down the drain. So I'm just analyzing based on this, right? So my take is, there must be some justification for KPMG to be daringly publicly make that statement, right? Or else no sane company will try to risk their reputation like that. Yeah, that's my take on this. We would, in consider macro factors which include US-China tension, market cap of equity, market being boosted by QE, how will you strategize in preparing all these uncertainties? And are you having a more pessimistic alternative on the next 6 to 2 months of equity market? My advice, honestly, what matters to you is actually not so much the equity market or the index. What matters more to you is whether the company you invest in, will they actually deliver better profits going forward. See, sometimes we got about all these noises, right? Okay, it's good to know. I mean, that's why it's good to be aware of what's happening in the US, where's the index now, so on and so forth. But when it comes to your own personal investments, right, you must always understand this. What matters to you more? Is it the US GDP? Is it the US QE? Is it the US index? Is it the Malaysian index? Or is it whether the company that invests in will do better going forward, or will it do worse going forward? That's why I understand what I said. My approach to investing is business-centric, because I really look at it on the business. So what is more concern to me is, when I look at my portfolio, these are all the companies that I'm holding on. Will they do better, or will they do worse? Is the currently drop in profit, is it something that's temporary due to some business dynamic challenges like now, or is it a reversal of trend, where previously what is making them profitable is no longer working? So ask those questions in your own portfolio. Those questions matters more to you in your portfolio rather than all this macro perspective. It's good to know, but it doesn't mean that you have to actually put a weight to consideration when you actually looking at a portfolio. I hope I understand where I'm coming from. Yeah. Any thoughts of furniture manufacturing sector? It's a sector I usually avoid because it's very hard to guess their earnings. Yeah, that's why you notice that furniture factories players are always traded at a very low PE. Yeah, because they can swing, and not to mention somehow their factories tend to catch fire quite often. Yeah. Peter's bazooka always up and I've managed my bazooka already, but it's okay. It's a very weird emotion, right? And am I celebrating that I'm right? No, actually, that's why it's a very weird situation. In fact, it's quite disappointing that I got it right, because honestly, I have surrounding me a lot of friends who are actually caught in glove. Of course, they don't listen to me. Nobody listens to friend, right? They don't listen to friend. So yeah, they hear me. They hear my argument. Yeah, makes sense. But yeah, guess what? They still jump into glove, and that's the unfortunate part. I have quite a lot of people actually who got caught in glove. So it's really the kind of emotion way. Am I blowing my trumpet because I'm right? No, unfortunately. But in fact, I'm feeling more sad that I'm right, because there's so many people that I know actually are bleeding from glove, and this trend to me, as I mentioned, explained earlier, it's not something that's going to reverse out fast. It takes at least another 1 year plus before the ASP, the new ASP trend can be seen. Yeah. What do you think of the local solar market? Yeah, I think I explained earlier about this LSS4. I think margin will be challenging. Yeah. How will Malaysia lose against China decoupling? A long forgotten word, decoupling. Decoupling was a famous terminology being used, I think, in the year 2000 era. Decoupling that time was very hot concept, meaning to say the whole concept of decoupling is China has grown so big. This is the 2000 era, 2004, 05, right? That the US and China are no longer related. Meaning to say, China don't need US, US don't need China. Decoupled is like divorce, right? Concept. It was very big concept, very big theory. You read it in every major publication, right? During those period, over the last few years, notice nobody has ever thought about decoupling anymore. The reality is, the world is even more integrated and relying on one another now. Even so now, especially look at even US and China, right? If US sneezes, China will be affected. You can't help that. And if China is affected, US is also affected. So rather than decoupled, I would say the inter-reliance has actually increased more significant. How is Malaysia lose gain in change to decoupling? If you ask a very basic question, who is Malaysia's biggest trade partner? You'll be surprised with the answer, right? ASEAN is actually Malaysia's biggest trade partner, ASEAN. And China, and next, of course, is China. Not so much of US. But like it or not, that aside, any tension between these two will only result in one thing, resourcing of goods, be it from China and also be it from US. And this one generally on historical basis is always beneficial for emerging countries, not only for Malaysia, but it's actually for emerging countries. Do you think high freight costs will affect semiconductor industry? It depends on what kind of product I'm talking about. But see, generally semiconductors, if you talk about the ATEs, the machines, right, they are quite high value that can afford to sit aeroplane. But of course, the lower value machines, you have to ship by ships, right? So again, it depends. But if you go to small chips, yeah, they actually can be shipped by aeroplane. That's why they are not so much affected by the freight, right? What's your view of so-called investment guru that's made public and even their own members who sign for paid club premium membership? Is SC not doing anything on this or through or stock recommends as usual just mention it's just for fun? I think a lot of people everything how to rephrase it. By the fact SC is not doing anything, it doesn't mean they are not monitoring. SC usually may not bring up the case immediately. They may come up 5 years later, they may come up 6 years later, they may come up 7 years later. Right? But whereas on the other hand, actually, there are some who are already on SC watch list. So actually, you go to SC website, it's all declared that who are under SC monitoring list. So the unfortunate part is actually some of these gurus, their name are already on that list. So it's actually quite a public information. But somehow investors, when the greed comes, right, we really choose to ignore and we don't want to know. And that's where the problem comes. So yeah, actually, you can go to SC website. Actually, the watch list is already there. And actually, a lot of gurus, the name are there. But like I said, no, when things are hot, nobody cares. Yeah. So that's the unfortunate part. Okay, sorry, what do I miss? Any comments on Malaysian logistic? Not a sector I'm interested in, as I mentioned, because I don't see that this high rate is a reversal of trend, it's a permanent trend. It's a trend that is going to be reversed out subsequently. Right? So that's why I'm not so much into it. Then was there another gene arriving at $3 plus glove counter that you mentioned? Okay. How? Guessing. Good question. I know okay, this is really a rough back of envelope, right? I also, if you really think about this, as I mentioned, on average, right? One of the glove company at the peak of the profit before this pandemic is around 495 million, around half a billion profit. And you can assume that the glove price is around $20 plus minus. See, there's just too many products, right? Just take average number of products. Now, boil to the next question. What do you think will be the future ASP? If you think that on the most optimistic case, the future dollar is going to be $40, which is 100% higher than the previous. And of course, ceteris paribus, of course, things won't assume easier, but just a quick assume easier. That means likely the profit will be 1 billion, right? So at 1 billion, then the next question is, what is the average historical PE for glove? Historical PE valuation for market. Glove historically has always been around 25 times PE plus minus to 30 times PE plus minus. So if you assume that is a billion, with a 25 times PE, that's 25 billion market cap. So we take 25 billion market cap plus minus, we get 3 over ringgit, plus minus around that number. So this is a very simple back of mind concept. See, sometimes investing can be very easy, but we humans, we always believe that the more complicated it is, the more complex is it, the better it works. Sometimes it may not be the case. Sometimes simple exercises like this can actually put some things into perspective. What is my view on ringgit Malaysia? I hate to use the word. I think 4 ringgit is a new normal. I think it's a new normal. Will it depreciate further? Maybe the max 420, but I could be wrong. I'm very bad at foreign currency. I admit I'm very bad. So don't ever trust me on forex. I'm very bad. Yeah. Since our pandemic has caused semiconductor chain disruption, do you foresee income future not where changes structure of work? No, I think semiconductor value chain is not so much due to pandemic disruption. I think semiconductor value chain is more affected by China companies and US companies trade war, right? On the basis where US companies looking for other countries to establish their manufacturing, whereas China is accelerating their investment in domestic manufacturing, right? So that shift is not so much due to pandemic, but the shift is really more due to this. Yeah. Wow, got a lot of questions. Wait, Peter, 1 hour, not going to be enough. Make it 3 hours. I don't have to. I have to start at 6 o'clock. Yeah, let me choose. Okay, so let me choose which I haven't answered. Sorry. What think about Malaysian IPO scene? Is company like Sectoral listing in this market timing a good thing? It's a tough question. You see, you must understand whatever a listing done by a private equity or venture capital, or whatever you call it, right? Listing is always the exit strategy. And whenever the exit strategy, these are usually sharks. They will always maximize their valuation. Right? So then as an investor, do you really want to jump in when the other party is trying to maximize their valuation? Right? That's why there's always difference between a listing by a private equity and a listing by the owner themselves, where they really need the capital to expand. That's always where the difference is. But of course, they can always prove you wrong, like Mr. DIY. You know, they somehow are able to make the share price higher and higher. Advertisement time, without mentioning any names in the portfolio. Do you foresee any multi-baggers coming on? There is one. I think there are some. I believe could be multi-baggers. But again, I also can I also can be wrong. Yeah. Against uneven global economic recovery, what does the current of potential rising oil price could bring? Disaster. That's why I remember even in January I mentioned my view, right? To me, the concern is not so much of how high the oil price is. The concern is how fast the oil price rise. I mean to say the volatility, right? If the oil price sustained at this level or gradually increase, right, it's fine. The world have time to absorb the increase in the shock. But if the price suddenly, say for instance, if the next 1 month is spiked to $100, at this rate where the world is just about to recover, you have faced with a high commodity price, is a disaster. It's actually bad. What's my view of holding a stock forever? You can hold a stock forever, but you must be very, very, very sure you really understand the stock. There's nothing wrong to own a stock forever, but you must be really sure about what you're holding on. I always joke, there's two types of long-term investors. One is a long-term investor by choice. One is a long-term investor by force. Right? Yeah. Well, if you're holding a stock forever, investing should be treated like being part of the business owner in a textbook context. Well, you see, as much as the textbook, as a business owner, there will be a part where you will, okay, let me share this real example. When I was doing pharmaceutical industry, right, I'm analyzing pharmaceutical industry. I remember this was way back in 2005, 04, 05, I still remember, right? That time, Duo Pharma was not owned by CCM. So CCM actually launched a takeover on Duo Pharma, and he bought out the owner. Okay, these are all back of memory. I could be wrong, plus minus numbers, right? I think they bought out the owners for 100 over million, right? Of Duo Pharma, and that's how CCM became the owner of Duo Pharma now as it is. It was formerly not under CCM. So I still remember I got the news. So I quickly called the CFO of Duo Pharma. I said, hey, your boss started this company from scratch. Why he bear to sell it over to someone else? And the answer really opened up my eyes. He said, hey, bro, how long do you need to earn 100 over million? You see where I'm coming from? So see, it doesn't mean when you look at a business, your investment as a business context, it doesn't mean you hold it forever. Like it or not, there's a price for everything. Right? If somebody is willing to suddenly say your company is, you make a 1 million profit, if one day one guy come and offer you, hey, I'm going to offer you 30 million to buy out your business, will you say yes? I mean, why not? I mean, I take 30 million, I'm going to find another business to start another business. Right? So it doesn't mean, you look at in terms of a business context, it is still death to us part. No. If the price is good enough, you will still sell your business, right? Yeah. LC Titan reported high profit last quarter. How much higher naphtha price now? Is the profit going to sustainable? As I mentioned, my take is I don't think petrochemical price will sustain high for long. That's why I don't think so. I could be wrong, but I don't think so. Yeah, sorry. Right, I'm still trying to question. The question very long. I know. May I have a view on prospect of high PE stock like QL Resources if you don't use PEG for valuation? I think if you use PEG for valuation, right, QL is also not extremely high profit growth company. When I say extremely high, it means that it's not like the profit grow 50% every year. So even if you really want to use PEG, even QL is not a candidate to use PEG. The reality is this, right? QL Resources is a conglomerate. Plus minus, this is my memory numbers, right? I don't follow the latest number. Plus minus, I think maybe 50% of profit comes from poultry, the egg business. Maybe 20% comes from the surimi, the fish cake business, and balance actually comes from plantation, etc. Correct? Okay, now, this kind of business combination, if I ask you back the question, how would you value QL Resources? Will you use a single PE to value everything, or will you use a sum of parts? I mean to say, poultry has its own valuation, plantation own valuation, and surimi has own valuation. If you use sum of parts, right, you realize one thing: no egg company or no poultry company will trade at this kind of valuation. You see I'm coming from? I think the only reason why QL is trade at this valuation is somehow analysts are so conveniently, they group all the profit together and say, well, this single profit represents everything and so forth is this high PE, right? Which I think is nonsense, right? No, business is good. I don't deny their capability in. It's a good company. I totally agree. It's very well run, so on and so forth. But I just think the way analysts are giving the valuation to the company, I think it's a bit weird in a sense. Yeah. Yes. Sorry. There's this called SC Investor Alert List. Yeah. What? A lot of questions. Yeah. I try to. Please share your views on REITs. Is it considered recovery too? Depending on what REITs. You see, there's a few types of REITs. Let's look at it. Retail REITs, I think it'll be a bit challenging, right? Until really the recovery comes when people can go back to the malls. But then again, also depend on which retail mall we're talking about. I always view that in KL area or Klang Valley, right? The only malls that are actually have a dominant position, which won't die, is your Surya KLCC, Mid Valley, Sunway Pyramid, and One Utama. These four are the dominant one. Other than that, I think it's pretty cloudy on what's next for the other players after this. Office space, really challenging. I think work from home is something that is going to continue going forward. But assuming these numbers, right? Assuming now 100% work from home percent, even when economic were to recover, right? Like it or not, is it 30-40% will remain work from home? Only balance 56% will actually go back to the workforce. Under this condition, the requirement for office space will shrink. And we have quite a lot of office space in KL. So again, office space REIT will also be quite challenging. Right? So it's not a standard answer that REIT is good, but it really go down to the underlying asset, under what space they're actually operating at. Yeah. I'm choosing questions which I haven't answered. Like Old Town, how long it takes to earn 300 million? Yes, that's true. Right? If you can sell for 300 million rather than try to earn. Do you see COVID-19 pandemic recovery have any resemblance to the past cases? Yes. Spanish flu, I think the closest in terms of severity is Spanish flu. And actually after that Spanish flu, the global recovery is actually pretty strong. Right? So that's where my optimistic lies. After every pandemic, the global recovery is actually pretty strong. What do I think of building infrastructure plan and benefited to us industry to focus? No. See, it's not actually it's nothing new. This is the old playbook. It's the old economic playbook. The best way to actually stimulate domestic economy is infrastructure. That's it. Now we understand why our past prime ministers always had to go for all this, build this, build that, build this, build that, right? Because that is always the fastest way to build an economy. It's an old strategy. It's nothing new. It's not something wow. It's not like a new strategy that's being. Any benefit to us? No, unfortunately, no. It's purely infrastructure spending. Yeah. Can you, on opinion, how retail investors can build own ecosystem like sustainable investment methodology? Wow. The biggest challenge is this. You have to define what is your parameter for sustainable investment. Because sustainable investment is a very theoretical thing. When it comes to real implementation, right, a lot of parameters doesn't work on an ideal scenario. So there will be trade-off. So when you want to do on a sustainable investment methodology, you have to be aware of your parameters, properly define what you're actually expecting. Right? It's not as simple as it seems. A very good example, I like to give an example. Take sustainable investment, take about green investment, right? ECG, environmental, social, and governance, the environment, for instance, right? Globally, sustainable funds or investment ESG funds have to classify Tesla as green, right? But the green is depending on which parameter you use to assess. If you assess Tesla purely based on carbon emission or carbon dioxide emission on the vehicle itself, it's green. But if you really analyze the whole value chain, it may not be green. Let's take the battery alone, right? Rare earth to produce the battery. The mining of the rare earth is even much more pollutive than mining of oil. You see where I'm coming from? So, but nobody add that in the equation. End of life battery. Only 5% of the battery can be recycled. 95% of the battery can't be recycled. So what about the pollution after that? So if you use end of life methodology to actually analyze electric vehicle, it's not as green as it seems. But people are just drawing the parameter. I'm only looking at green in terms of carbon emission because I want to achieve is net zero. That is why the electric car becomes green. So that's what I'm trying to tell you, that you need to actually define your own parameter on your assessment of what is sustainable and what is unsustainable. And I think that will be the biggest challenge. Oh, sorry, I managed to finish all questions. It's 10:14. Yeah. Right. I better end before I lose my voice. Thank you so much for joining this session. Really appreciate it for you guys to stay on until now. So I hope this session gives you guys a very good indication of what's next in the next 6 months, how to position your own investment portfolio. Like I said, for you don't know my style, I don't give stock recommendation. I don't think that is the right thing to do. I think it's better to let you be aware of what are the challenges, what are the market dynamics, so that you can make much better informed decision yourself. Rather than the standard saying, rather than give you fish every day, it's better that I teach you how to fish. Well, again, thank you very much for joining me. I really appreciate your audience today, your participation today. Till the next session, which I think will be January 2022, for a market outlook. But unless if there's sudden major events in the market in the next few months, right? Definitely I'll have another market outlook session to actually for all of you, right? Barring unforeseen circumstances. All right. Thank you very much. Stay safe, everyone, and good night.